Good morning, good afternoon, and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by Mouro Capital General Partner, Manuel Silva Martinez. Great to have you with us, Manuel.
Thanks for having me.
Okay, so before we get cracking, we are going to learn a little bit more about Mouro Capital. All right, so Manuel, tell us about Mouro Capital.
So Mouro Capital is an early to growth fintech fund. We invest essentially in all things fintech, and we take a little bit of a broad view of fintech across the United States, North America, more generally Latin America, and Europe. We've been running under the Mouro brand for slightly around 2 years, let's say. We have 45 companies in our portfolio, and typically we invest across three big themes: infrastructure, because you can't really reinvent the industry without infrastructure; new products and services, because again, clients are changing and they're interested in maybe things that banks aren't offering, or just better versions of what they get from the traditional industry. And then more and more, we're looking at what we call adjacencies of fintech. So other spaces, other customer journeys, other industries that may not be purely fintech, but where we see a connection between the two, things like mobility, prop tech, supply chain, et cetera, et cetera. So clearly trying to redefine where the boundaries of the industry are.
Right, and I think you've got about $400 million in assets under management. Maybe you can tell us, I think you said you've got something like 40 investments. How many investments did you say you have?
That's right. We have slightly over 40 out of that $400 million commitment. We're in the likes of Upgrade, Trulio, Secure in the US, when Neobank Claw in Mexico, for example, Creditas in Latam, and I guess closer to home, we're in the likes of Curve, Tradeshift, Uncapped, and a bunch of others.
Okay, I was going to ask you what three of your most notable fintech investments were. I guess you've probably in those names that are those three, and maybe you can just highlight the kind of three most significant ones and why you went for them.
Yeah, I think, for example, one example of those would be Uncapped, which is a revenue-based finance lender, wanting to also deploy more of a more holistic banking relationship. And the reason we invest in them is because we like kind of the fresh take on SME banking and the verticalization of the offering to the e-commerce and the online kind of businesses, which tend to be quite underserved by the traditional industry. Another investment, for example, bringing more the LATAM angle, is a company called Nowports, which is in the logistics space, in the freight forwarding space. Again, what we like about it is that we are exploring through them some of the boundaries of the industry and how finance meets supply chain, which is very core to our thesis. We across all the themes we invest in, we always think about the utility of the banking products, most of the product themselves, right? And so somehow, if you're embedding those products into those new experiences, you're creating new markets and new revenue. So those are two companies. I could speak about all the other children quite a bit.
I think two will do. Just briefly, if you can. Any pausing for breath now until the world calms down in terms of, I don't know, interest rates, inflation? Obviously, we saw Russia invading Ukraine as well. Or is now the time to take advantage of opportunities given the drops in valuations that we've seen in some places?
Well, we do. The way I like to think about that is that we invest in fundamentals, right? I mean, at the end of the day, irrespective of what happens in the world, of course, all of those all of those elements you mentioned are to be taken into consideration. But at the end of the day, we're in the middle of an industrial transformation of banking, right? Banking, as we know it, is doomed to change. I'm not sure if it's disappear or more for transform. And at the end of the day, what we're looking for is companies that build on strong fundamentals and that are really able to picture a vision of that future of the industry that we share as investors, right? I mean, granted, there may be certain shifts in the market where the supply and demand of capital is changing a little bit, and probably for the better coming from the investor side, in that we're bringing back rigor and a little bit more of the old way of investing to the market. But at the end of the day, if you believe in the fundamentals you invested in, I wouldn't say the rest doesn't matter, but at the end of the day, it's a really long-term game.
Right. Okay. So look, we've heard a bit about Mouro Capital. Let's now get to know Manuel a little bit better. So, Manuel, you've worked in finance and investing all your career. What did the young Manuel want to be when he was a boy?
That's a very good question. The young Manuel wanted to be either an architect or an academic in social sciences. And somehow there's a little bit of that in being an investor in many ways, right? I think the social sciences and the academic piece comes in kind of the willingness to keep on investigating problems and finding solutions. Me and I guess the team around me, we think about things a little bit in that way, very thesis driven. We think a lot about the why, and that connects with with the little Manuel. I think on the architecture side, maybe there's less of a connection, but let's call it building. We're definitely building things, right? But that's a little bit of a far-fetched connection there, maybe.
Right. So, what went wrong? I mean, you wound up in VC investing. So how did you kind of fall into that instead of pursuing some of those other early passions?
Well, I would say, not sure if it's wrong, but but we ended up here, that's for sure. No, I mean, I think at the end, I started my career more on the traditional banking side, so on the strategy side, so which can connect allegedly with the academic side of things. And ultimately, I personally felt that there was a limitation in the way banks, 15, 20 years ago, were thinking about other strategy. I mean, clearly, banks were expanding by buying other banks, by buying franchises, kind of in a status quo way versus the traditional industry. But very few were thinking about technology and kind of what was coming. And because of that, it was really hard to innovate organically. And so I started spending a little bit of time thinking, okay, what's inorganic, right? And banks are not necessarily very good at acquiring companies and operating companies, but somehow I landed on this VC model, maybe a corporate VC model, which is kind of my early days, where you can create the balance between investing in companies and making entrepreneurs successful, but also thinking about what those innovations mean for the future industry and how those can change the incumbent, either by teaching them what to do or by partnering with them, right? And that's really that thought process that took me to venture around, I don't know, 15 years ago, something like that.
Okay. What's the worst and best investment you've ever done?
That's a very good question. We we did an investment a long time ago. I'm not going to name it, but we did an investment that, yeah, that one. I mean, it's public somewhere. It was a company where basically a lot of things were wrong in this, obviously, but wrong in the sense that we should have spotted why they were wrong. And I think it's one of those cases where we were in love with a problem, uh, to the point where we didn't see the execution, and the company went bust quite quickly after we invested, which was a little bit came as a surprise because we were still a little bit in honeymoon mode with those guys. So it wasn't great, obviously, but lots of learnings from that and lots of kind of building awareness when we look at new companies. Uh, I would say in terms of the best investments we've made, I'm not sure I would measure those. I mean, there's a bunch, right? And again, probably not worth mentioning any of them specifically because you're gonna not like it. But I would say for me, they share the common trait of being entrepreneurs who want to work with you, entrepreneurs who are willing to listen and who are willing to keep you accountable for the advice that you give them, and really entrepreneurs that you end up being, let's call it, friends with, because you have this sense of common journey with them. And there's probably four or five of those in our current portfolio that they know who they are. They know who they are if they listen to this.
Okay, briefly, I read that you are a wine aficionado and also big into hiking. Very quickly, what's your favorite wine and what's your favorite hike? And maybe other fintech founders will be you'll accidentally bump into them on the route if you give away where your favorite hike is.
Well, my family comes from a wine region, a very unknown wine region in northern Spain called Ribeira Sacra, which is small production northwest Spain above Portugal. So of course that needs to be my favorite wine, right? I welcome everybody. It's a great region. It's beautiful in addition to being a wine paradise. So on the hiking side, the one that is most memorable, I did a trail called the Kumano Kodo in southern Japan, which is a little bit of a mix of spiritual and hiking. Cannot recommend it enough.
Okay, there we go. We've got a wine recommendation and a hike recommendation. All right, so Manuel, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Mouro Capital General Partner Manuel Silva Martinez. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Manuel. So let's now talk about the future of finance. We discussed earlier how Mouro Capital, of course, was spun off from Santander. It's not the only VC arm of a big bank. Does this tie your hands a bit in that your investments have to be useful to your owner, or perhaps was that the whole point of being spun off in the first place?
That was indeed the whole point. I mean, I think at the end of the day, we as investors are working with a number of elements that are long-term elements and that to some extent need to be sheltered from maybe shorter-term priorities or cycles in corporations, right? Things like your personal reputation, your network, and also the ability to really invest in startups and support them for the long term. Those are things that are best done in an independent structure like we have today, right? So effectively today we're an independently managed fund, so we run our own management company, and as you said, Santander is the LP of the fund.
Okay, and you worked before Santander. You were at BBVA, which I think was one of the first to acquire and develop fintechs inside a top-tier bank. 10 years later, results have been a bit mixed, to say the least. Simple has closed, Holvi has been sold. Was it kind of just too early? What do you think that the secret, or do you think the secret sauce between direct-to-consumer fintechs and legacy banks has kind of yet to be found, maybe?
That's a good question. I mean, reflecting back on some of the things I've seen, and not only BVA or Santander or other banks. I mean, as you say, a lot of banks have over the past 5 to 10 years developed much richer kind of inorganic strategy when it comes to dealing with innovation. I think one thing that we shouldn't forget is that there's something intrinsically experimental to everything that we do, right? Whether it's as investors or as corporations that want to innovate. And at the end of the day, it's easy to always think about the things that went wrong because, especially when they're associated with a big brand, it kind of makes the headlines. But for me, I think all of that at the end of the day, it's part of the experimentation, right? So I've always said that big banks should be, and I remember an old colleague saying that big banks should have the ability to make mistakes and to learn from them. And at the end of the day, I think if you're really learning from those and there's a learning feedback loop, I think they're worth it, right? But you need to also put yourself as an organization in the mindset of let's learn from everything we do, whether it's successful or it's not that successful.
And at Santander, I think I was reading that you had an internal rate of return, or IRR, of some 25 to 35% since Santander started the fund in 2014. What constitutes a good investment for you in terms of return? Is it 10 times your investment? Is it 100x? What are you aiming for? And how often does that happen?
Yeah, I would say, looking at I mean, as I was saying at the beginning, we do invest early to growth, right? I would say that number probably changes. I mean, at the early stages, seed stage, which we do, pre-seed, which we also do lately, Series A, you're probably looking at 10x your investment. If you don't believe that that's achievable, probably your money is best used somewhere else. As you go up the ladder, probably if you're able to underwrite 5 to 6x, you're probably quite happy. And for good and for bad, within our portfolio, we've had a lot of those. I think, from the top of my head, I would say we have maybe a dozen of companies that are within that already, I would say, and all the others are kind of growing into that. I mean, think that our portfolio is reasonably young for the typical tenure in fintech. So everything is looking kind of in the right direction. We hope that we can achieve that, as a portfolio matures.
Okay. And you've been investing in fintech for more than 10 years now. What's been the biggest change that in trends or in change in the industry, I guess, in fintech in that time that you've noticed?
Um, yeah, I think I would say over the past 10 years, the problems that fintech entrepreneurs are trying to solve are becoming increasingly complex. When I started investing, these were the early days of Lending Club. These were the early days of Wonga. These were those days, right? Where at the end of the day, fintech was all about replacing things that banks were not doing all that well and just creating new experiences, right? So there wasn't a fundamental reflection on the boundaries of the industry, I would say. It was more about just digitizing basic products, right? Which was interesting, but now in retrospect, you realize that there's so much more that can be done, right? I feel the kind of problems that entrepreneurs think about today, whether it's again pushing the boundaries of the industry, thinking on how to embed financial products into very complex customer journeys, thinking about the changes that new technologies like blockchain across the board or that quantum computing can bring to the industry. Rethinking those things is far more interesting, and I would say the other thing related to that is the kind of talent that has migrated to be those entrepreneurs, right? I mean, the level of professionalism, the level of knowledge that some of the new CEOs are bringing to the table is actually remarkable, and that's the other big change, the quality of talent that's driving the industry.
And if you look into your crystal ball in 10 years' time, what do you think the biggest change will be versus where we are right now?
I think probably the biggest change over the next 10 years is that if you were to draw a list of the top financial services providers today and the ones in 10 years, I think I would be very surprised to maybe not recognize many logos or to recognize certain logos that you would not think are financial services provider. But if you really think about it, they're occupying the same kind of utility as one would normally expect from a bank or an insurance company, right? So I think it's really this kind of generational shift or generational change in who's driving the utility, assuming that we can still define it as financial services, which is maybe more of a 20 years time thing. That's really where I think the change is headed towards.
Okay. Slightly tricky question perhaps for you, and I'm sorry to put you on the spot, but should partners at VC firms, private equity firms, hedge funds, should they pay more tax, especially as governments seek to claw back some of the stimulus that they've been throwing at their economies during the pandemic?
That's a good one. I think I think I think this. I think government should encourage innovation and should encourage risk takers and should create the schemes that allow money from risk takers to flow into the ecosystem, because those are the ones who are creating the economy of the future. Whether that's paying more taxes or paying less taxes or paying different taxes or creating incentives at certain stages for. I don't know what the right answer is, but at the end of the day, I think taxation and public policy should be aimed at creating the champions of the future and understanding the mechanism that drive towards that in fintech and in many other sectors in a way.
Very diplomatic answer. Okay, so time now for our round of rapid fire questions. Are you ready?
Go for it.
Okay, lovely. So very brief, like one word answers would be great. Okay, first up, most successful fintechs we know are kind of very well funded, but are still losing money hand over fist. Is this fine for now or something we should worry about?
It's fine.
What fintech segment has the biggest potential over the next 5 years?
Infrastructure.
What's the biggest pain point in your everyday financial life you'd like to see resolved?
Long-term financial planning.
Do you think we are at the beginning, middle, or end of the fintech wave?
Middle.
Do you have a metaverse strategy?
Not yet.
Do you think regulations in the EU and US have kept pace with the new possibilities and behaviors we're seeing in the financial industry?
They're getting better at it.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of our future that we really shouldn't miss out on?
An interesting concept.
Have you ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
In a different way, yes.
Okay, I think we are out of our 90 seconds, so I'm going to add a few more to throw in there, but I want to make sure that we were actually within our 90 seconds of rapid fire questions, because that, I'm afraid, is actually all we have time for. So I really just want to thank you, Mouro Capital General Partner Manuel Silva Martinez, for joining me today.
Thanks so much.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Take care.